Hey, it's Clay at claytrader.com, and in this video, I'm going to show you how to short a stock and what shorting a stock looks like within the world of online trading and the stock market as a whole. Before I go any further, let's set up some context. If you hear me say shorting a stock or going short and you think kind of like what I did when I got started is, oh, so you mean a trade where it's going to be very quick. It's going to be a very short trade. You're not going to be in it that long. Like I said, that's exactly what I thought shorting meant when I got started. But no, there's no time frame attributes associated with it at all. Time frame and shorting has nothing to do with one another. Shorting at the core, and actually let me take a step back. If you're interested in more about how this is all working, what's going on behind the scenes, then if you're watching this video on YouTube, down in the description box, or if you're watching this at claytrader.com, just right down below the video, I'll link to another video I've done where it's just what is shorting, how does shorting work, for more of the, like I said, kind of behind the scenes perspective of, how what I'm about to talk about and show you actually works. But for this, all I'm going to say is right off the get-go, and it's going to sound bizarre if you've never heard of shorting before, but shorting means that when prices go down. So if a stock price goes down, then you as a trader make money. I'm going to say that again. When stock prices go down, you as a trader make money. Very, very odd, but yes, it's possible. And again, wait, how is that even, what? How does that work? Like I said, I'm not going to spend my time here doing it because I want to, like I said, let's get into the real world of trading and I'll show you how it works. But if you want more of the behind the scenes, watch that other video down below. So the way you short, the way shorting all plays out is you need to actually sell first. Now, the traditional mindset when you get into the market, it's what? Buy low, sell high. Or in other words, you need to buy the stock and then you sell it higher. The exact opposite is true for shorting. You actually sell first and then you buy. So the way it works, at least in my platform, is, and this it's going to be pretty much the same, but all platforms are a little bit different. But in my platform, there is no go short. There's no shorting button. You just simply have to focus on sell, and you sell first. You hit the sell button first, and that's it. Like I said, other platforms might have a sell button, and then right next to the sell button might have a short platform. That's what that means is, okay, you're going to try to make money when prices go down. So that is how it all works. And what I want to do here is just show you kind of how it fluctuates, because it's very weird the first time you see it, and especially the first time you do it, when you're thinking, wait a second, all right, yeah, I see my profits, they're going up, but the price is going down. This is just weird, and it is weird. And my goal here is this video is maybe to kind of alleviate some of the weirdness when you do it, because your eyes will be used to actually seeing how it plays out. So like I said, let's just, and like I said, this is my trading platform. I'm done for the day. And I want to get this video done. So what I'm going to do here is, first off, let's just say, and let's set up a story. So here I am. I'm looking at this stock being AT&T. I think most people have heard AT&T, ticker symbol T. And I'm just looking at it and I'm saying, you know what? I think this thing wants to go down in value. Now, because I think it wants to go down in value, that means I want to what? I want to short the stock, because I think the stock's value is going down. I think it's headed in this direction, okay? Now, in all actuality, I'm not saying this is like some sort of shorting pattern. That's not what I'm saying at all. My point here is just to kind of walk you through the thought process of what you would do if you wanted to short a stock. So pull up AT&T. I determine using my strategy, using the tools, whatever tools you want to use, but somehow you arrive at the conclusion that, you know what, I think AT&T is going to go down in value. Next thing is, all right, well, how many shares do I want to short? So down here, just because this is example sake, I'm going to short 10 shares. I want to short 10 shares of AT&T. What price do I want to short them at? Well, let's say, you know what, I want to sell those at $34.89. Okay. So I'm wanting to sell, so that's what I'm to hit first, 10 shares of AT&T, ticker symbol T, for $34.89. And in order to do this, like I said, I'm going to have to hit the sell button first. Now, before I hit the sell button, pay attention down here, because this is where it's going to show up. And after it shows up, at that point, watch this area right here, because that's going to start to fluctuate. You're going to see colors change. Red means I'm losing money on the position. Green means I'm making money on the position. Now, I don't know how that's going to play out, because I don't know what's going to happen here. But for this point now, given the prices started to go back up, let's just say, you know what? I'm willing to short. I'm willing to go short at 34. 34.96. Up here, you can see the prices of the stock. So it's 35. Well, now it's dropping, so it's moving relatively quick. But these are the couple prices. This is called level twos. If you're not familiar with what this is, so that's level twos over there in trading tool jargon. But I'm going to go ahead and say, you know what, I want to short at 34.96. So watch down here. I'm going to hit the sell button and then watch again over here, and you'll see the position show up. So let's hit sell. Oh, well, I missed it. All right, let's try again. There we go. So what is this telling us now? Well, at this point, I am short, ticker symbol AT&T, and see the negative sign. You're going to have to look very close, but there is a negative sign in front of the 10, meaning I am short. And the other thing to keep in mind is that number right there. See the negative 50 cents? That means I'm losing money. Uh-oh, now I'm losing more money. Why am I losing money? Because look here, the price is actually going up, which is bizarre, right? Now I'm losing more money. I'm down 90 cents. Again, why am I losing money right now? Because the price is going up. Very, very odd, isn't it? To sit there and be like, all right, Clegg, the stock is going up. Oh, but you're losing money. What? That's how shorting works, is you want to see the prices go down. But if you're wrong, which as of right now, within this context of things, I am wrong, because I'm wrong and because the price is going up, guess what? I am losing money, which again, just continue to watch that. Watch that. The higher the price goes, so the higher these numbers over, that was a poor choice of colors there. Let's try that again. The higher these numbers go over here, the bigger, oh, look, now I'm down $1.30. I am losing $1.30, $1.40. Why? Because over here, the price is going up. Now, if you're totally new, this is called a technical chart over here, and these are called candlesticks. So no, it's not the matrix or anything like that. But that is exactly what's going on. Now, what is going to take for this number to go down? So now my loss is decreasing. Now I'm only losing $1. Let's see if the price goes back down. And if it goes back down, well, this number is going to continue to get smaller and smaller. But as of right now, I am losing $1. Now I'm down $1.60 because the price is continuing to go up. Now I'm down $1.80. Isn't that weird though? I mean, you would think the traditional sense, buy low, sell high. Oh, yeah, all right, go price, go. But in this situation, I would be thinking and, wanting the price to actually roll right back over. So I'm trying to stall right now. I'd like to see it pull back some just so we can see that number shrink. Ideally, maybe down below $1. Or who knows, maybe we'll get the example where that goes up to $2 and then $3 because this thing just keeps going up and up and up, which would, so right now I've lost $2 because I got short, meaning I sold my shares at $34.94. But because the price is now at 35, again with the color, Clay, I apologize for that. But because now the price is at 35.10, 35.11, 35.13, that is why that number keeps on changing and getting bigger in the direction that I don't want to see it get. I want to see this number green. That would mean I'm making money. But because this thing keeps on moving higher and higher, my loss keeps on getting bigger and bigger. So what I'll do is I'm going to go ahead and pause, and I'll see if this does ultimately roll back over here a little bit to see that if we can watch that number maybe start to shrink, and then you can see the exact opposite. But yeah, right now, this thing is essentially just going straight up. So I'll let it roll. But so again, it's getting higher. Watch the prices. The higher that number goes, so the higher the value of the stock rises, the more and more I am going to lose money. And that is how shorting works. That's what it looks like. You want to see the values go down. And in this situation, it's not going down. There we go, $2.90. Am I going to go to $3 on the $3? I'm down. $3.10. Now, had I quote unquote gone long, which is the traditional way of trading, meaning you buy first and then you sell, well, I'd be making all kinds of money. This would be a great trade right now. But in this quote unquote story, yeah, I chose poorly. I thought the price was going down, and that's not what's happening. All right, I paused for a little bit, but now we're approaching maybe even being down $4, and there it is. Now I am down $4.10. Look at this move. I chose very, very poorly, right? As a short-sighted trader, this is what we call the house of pain right now. $4.30, $4.40. I mean, this is kind of fun. Let's see if we can get this up to $5. Wow, this is good stuff. And my voice cracked. Could somebody tell me why I'm getting hair under my armpits? I don't quite know. Why is my voice changing? What's going on with my body? Anyways, never mind. 460, 450, 44. All right, there we go. So what I'm still trying to catch here is, let's just see the price come down a little bit. And if the price comes down, that number is going to shrink. But as of right now, this thing is just completely going straight up. But that is how it all works. And you've seen it drop. So if we start to see some red, as these are called candlesticks here, red meaning the price is pulling back, then that number will start to shrink. So there we go. See how this is turning red, but now this number is actually shrinking? Well, that is because I am now starting to get the price to go in the direction that I want it to go. So at the core, as it plays out, I just want to really hammer this home, because I do realize when you are just getting started and you're brand new to the stock market and to day trading and just trading as a whole, this is a very, oh, am I going to get, there it is, $5, $5.40, $5.70. Wow. This is what is known as a house of pain from the short side. Now think about it. How high can a price rise? A price can rise theoretically forever. So that is why when you go short, you need to be maximum, or you need to be at maximum kind of full go in the risk management department. You need to be disciplined, because in theory, this could go up forever, meaning my losses are potentially unlimited. Whereas when you buy, what's the lowest a stock price can go? Well, it can go to $0. But when things are shorted, or when you are shorting, prices can theoretically go up and up and up forever, meaning your losses in theory are unlimited. Now there's things called, and I'm not going to go down that rabbit hole, but there's things called margin calls. So it would never get to that point. But the idea here is that, wow, almost $7. Woo, I got this. Look at this thing. I've never been so happy to take a loss, but this is a really good example of what you don't want to see happen when you go short. The price is going up. But again, if I was long, if I had bought first, well, then this would be a green number right here. And I'd be rejoicing. But in this situation, I'm in the house of pain now from the short side of things. So given that I'm watching this and I'm getting crushed and things are there we go. Well, all right, so notice the red candle. So a red candle is forming, and notice that number now. Well, it was starting to drop in value. I really want to, this would be the perfect case study video if this thing could just go down. But no, it just wants to keep going up and up. I mean, this is truly getting crushed. I'm potentially going to be down $1 per share, meaning I got this thing way wrong. Now, again, that's why I offered up a disclosure. I was not saying that this was some sort of pattern that you should have went short. I just randomly went short at a spot. But so let's just say now, as I'm trying to stall and this thing just doesn't want to pull back. So I'll just wrap things up, because you get the idea. You've seen that voice kind of, or the price drop down a little bit. But let's say you're like, all right, I need to stop the losses. I want to stop losing money. Or in other words, I want to exit the trade. So how do I exit the trade? Well, remember back, how did I enter the trade? I needed to click the sell button first, because that's how shorting works. You sell first. But now that I want to exit the trade, you need to buy. So that is where, whoops, not right there. That is where I'm going to come down here now and click buy. And just admit defeat, admit the fact that this is getting way out of control. I'm losing a lot of money, so I want to get out. So the way to do that, and let's just say because I'm willing and want to get out at any price, I'm going to just change this over to what's known as a market order. And I'm just going to go down here. Well, now looking like the price might want to move down here a little bit. So let's watch. Let's see if we can get this at least down below $7. There we go. Kind of. Again, if you see the red candles over here form, you're going to see this number drop and drop and drop. So can we get this to pull back just a little bit more to bring my losses down below $7? That's really the key question right now. So let's see how this plays out. Again, we want to see this number get low. There it is with you. We want to see this number get as low as possible. The lower that number goes, the less my loss is going to become. So there we go. Going down. Now we're down below, well, we were down below $7. But let's see if that number can move further and further to the downside direction. There we go. Look, down below $7 now. So this is weird, right? I'm actually happy now that I'm seeing red. I'm happy that the price is going down. And now it's dropping even more. Now we're down below 6. Excellent. Again, red candle. The price is going down, so finally this number here, the loss is getting smaller and smaller. Now, if it dropped down far enough, then eventually that number would turn green. But it's going to take a major crash at this point for that number to ever go green. But let's just say, all right, wow, I was down over $7. Now I'm only down, $5.10. Maybe I can even, now I'm less than $5. So I'm going to go ahead and buy. So there we are. So I hit the buy button, and you can see here that the position has been locked in. So over here, it actually shows that I sold and then bought back for a loss of $4.90. Now, remember that. So I couldn't have drawn this up any better. So that number was a whole lot more when the price was up here. But because the price did come down, my loss was ultimately, was able to be minimized. But again, just to really reiterate that, well, now, and I shoulda, coulda, woulda. I should have held longer because that loss would have gotten even smaller. But if the price theoretically goes down far enough, then that number would have eventually changed green, and it would have been a profitable trade. But that is how shorting works. That is how you go short. You sell first, and then to exit, as I just showed you, you have to buy. And that's how it all works. Bizarre, crazy, and I realize, hopefully this helps you out a little bit, but I assure you, I promise you, the first time you ever go short, it is, I don't even know how to explain it other than you just kind of have to experience yourself. It's almost like a euphoric feeling. It feels like you're in the Barzaro world where you're in and you're saying, go down, price. Yes, the price is going down. And it's, like I said, very, very odd, but that is how it works. So hopefully this video helped you out. And if you enjoyed the video, then please hit that like button and leave me a comment down below. Have you ever gone short before? Or let me know, maybe this is the first time you've heard about going short, and maybe you're one of those people like I was that thought going short meant, oh, so that's going to be a quick trade. It's going to be a very short amount of time. Like I said, no shame there. That is exactly what I thought when I got started. So let me know down in the comment section below, or if you just have any more suggestions for videos like this. But if nothing else, and you would like for me to continue to make these, the easiest way to communicate that to me is just to quickly hit that like button. And then hopefully you ultimately decide to subscribe to the channel. If you want to see more of going short, then I have lots of what I call the live trade videos on the channel. And lots of times I am going short. So you'll see this exact thing. And you'll see, now the numbers will be bigger because I'm going short with more than 10 shares, but you'll see this exact dynamic going on. And one of the comments I get quite a bit on those live chat videos is, I'm so confused, Clay. Why do you want the price to go down? But now at this point, I officially have a video that I can link people to so that they can see how this all works out in the real world. So like I said, hit that like button, leave a comment down below, subscribe to the channel. Thanks for hanging out. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.